The S&P should be going higher until mid-October. Today is September 24th, and the S&P has basically followed what we expected, which was after the Fed meeting, the market would rally. And the immediate reaction was it ran up, it ran down, and finally it took off to the upside. On the 19th, it followed up quite a bit further. The short-term basic story is we're expecting a high on the 24th or 25th, to which today or tomorrow, probably tomorrow, and we expect a dip, a corrective wave, not a huge thing, into the early part of next week, potentially on the 29th, which is Sunday. One of the cycles comes in that we've been watching. So somewhere between the 29th and the 2nd of October, we're expecting the next low. And that would be an opportunity for continuous upside for a few weeks after that. So there's probably going to be a little bit more upside potentially into tomorrow, followed by a pullback for 2, 3, 4 days into Monday, and then a pretty decent rally continuing. So in price-wise, the next resistance levels are at 58.22 and 59.44, and we expect both of them to get reached by mid-October. Now, the cycles that are actually repeating are important. The first one is the 49-week cycle. We've talked about it on and off over the few months, and basically have been following that. And it basically has a high here around the 25th, and if it repeats, has a little low on October 2nd, followed by an upside rally exactly where we expect, which is until between the 10th and the 16th of October as a high. And also, the multiples of the 49-week cycle have been very usable, very important. 3 cycles of it ago, 3 times ago, it came out as the high in 2022. 5 cycles ago, it came out very close to the high in 2020. 15 cycles ago, it came out as the high in 2011, followed by a fairly nice decline. And most important is 18 cycles of this 49.25 week cycle is the high in 2007. And what's interesting about that is that the market in 2007, the last few months, has been repeating almost identically to what's happening in 2024, 17 years ago. We had a high July 16th this year. They had a high July 16th that year. The market fell down into August, and then it rallied up into the high in October 11th of 2007. But the interesting thing is that was the last time that the Fed lowered interest rates by 50 basis points. And they did it this time as well. And we anticipated that would be the case, that they would lower by 50 basis points. And we expected a rally because it was still not the primary probability. And people were a little bit surprised by it. Even some very sophisticated prognosticators were wrong about that. This is all information for the swing trader level. So if you're a swing trader, basically you're looking to buy dips potentially at the end of this week, early next week should be a low, and the market should rally for a couple of weeks up into the middle of October. If you're a day trader, look for a high tomorrow, potential pullback a few days into Friday, Monday, and then onward up. If you were looking at the bigger picture, more of an investment level, where are we in the development of this bull market? Is it over? What's the story? The reality is that there's a 3.5-year cycle. It's actually 3.56 years. And double that, which is a little over 7 years, 7.12 years. That's been very, very important in the longer term story. The 7-year cycle is actually the highest probability of all the pattern matches that the computer came up with. But more important is if you look at it closely, the high in the year 2000, and then you add 7.12 years, you get the high in 2007. If you add 7.12 years, you get the high in 2014. And then you add that again, and it comes in just after the end of 2021, January 4th of 2022. Interestingly enough, the next iteration of the 7-year cycle is going to come out in April of 2029 as a major high. And what's also important is the 3.5-year cycle is also alive and well. It's not quite as dominant as the 7-year because it's half of it. But the 3.5-year cycle, you see two occurrences of it in this picture. One of them is the most recent 3.5 years ago. The other one, also in blue underneath, is 7 years ago. And you can see kind of the path on a weekly basis of what's likely to be happening in the big picture. Both of them have highs in the middle of 2025. They both have a bear market starting, with one low in 2026 and a second low in 2027. But notice the market continues up into the middle of 2025. That's an important consideration. So those who are thinking the market's going to immediately fall apart, it isn't very likely. So it indicates that at least one very important cycle is up until July of 2025. It doesn't mean the market's going to continue to go straight up, but it does mean it's not likely to fall apart until after July of 2025. The 60-year cycle is also repeating with very high level of correlation. It's still up about 90% correlated with the present year. And it also calls for a high in May of 2025. So the point is there's still some oomph left in this market. We're expecting, however, based on the shorter term cycles, a high in December, followed by a dip that should continue into April of 2025, and then another upswing at least until May and potentially July or August of 2025. So the bottom line of the whole thing is you want to be long until middle October. There may be another high around the election. There's probably a dip after the election. And after December, it's likely to go down, most likely all the way until April of 2025. Also, a couple things. Very important. We will be having another and an expanded trade forecast mastery course starting on October 6th, in a couple of weeks from now. Okay? And that will be an unusually strong course because we have some really good people coming in, and also because we're adding in what is a new technique. It's called the 6-point system, and that technique is extremely powerful. We're also going to be increasing the amount of astrology that we put into the course, although the primary course is not astrology, it's mathematics. Okay. If you're interested, please let us know, and there's still room and there's still some openings for new people to come in. So just to recap that, the bottom line is the market is not finished. It's likely to make a high here in October. It's also likely to make a high around the election, around November 5th or 6th. And that after that, it should come down for a few weeks, go back up into the middle of December, potentially higher, although 17 years ago it did not go higher. It just had a minor high there. But the bottom line is right away, the immediate thing is we're going higher. The secondary consideration is that we'll continue higher until December. And probably after that, there'll be a dip into the second quarter of next year, followed by further upside later in 2025. Potentially the final high could come out as late as August of 2025. And then a bear market is expected.